Hi there, Alex Klingelhoeffer from Exencial Wealth Advisors, OKC, CFA, CFP, on Twitter. Another question from a client this week I wanted to share. Question was, hey, when should I incorporate high risk, high reward investments into my portfolio? When is that a good idea? And certainly we all love a flyer. That's why gambling's popular. That's why cryptocurrencies have taken off like wildfire. People love investing a little bit, getting out a lot. It's part of human nature, right? We love that risk reward imbalance. We love, hey, I'm going to put in a little and get in a lot. Ultimately, when you're going to put a more speculative investment in the portfolio, you want to have a well-balanced portfolio beforehand. You want to have your fundamentals taken care of. You want to have a portfolio that's going to set you up for a long-term perspective first. Then if you're going to incorporate some of these existing high-risk, high-reward investments, it could make sense to take a flyer on a company or when you've done your own due diligence research, take a chance. It certainly keeps you looking at the market and really keeps your eye on the ball from an investment perspective. I think one of the neat things about a high-risk, high-reward opportunity, maybe like a local business or something like that, is that it does give you the opportunity to diversify a little bit. And when I say diversification, I mean not just of your financial capital, but also your human capital. So for instance, if you're gonna, let's say you're an oil executive or something like that, maybe we don't pick a high-risk, high-reward investment that's in the oil sector. You already have your entire career tied to energy. Maybe you'll look at a restaurant company, something that's growing, expanding, something like that. That's where I think those high-risk, high-reward investments can really have a place. Something that if you're in one part of the market, say that's very cyclical, hey, let's pick something that's counter-cyclical or not cyclical at all, that can really add some long-term growth to the portfolio. I certainly think it's a healthy part of investing, but I typically want to see it, if it's in the client's portfolio, to be something completely different than what they're otherwise doing. And of course, I want you to have your fundamentals correct. Just like in basketball, you learn the triple threat, you learn the jump shot, then you learn to get your handles a little bit better. So as far as when to put it in a high-risk, high-reward portfolio, make sure it is going to be a little bit off the beaten path, something different than what you're doing, as well as make sure you've got your regular investments done first. Thanks so much, and if you like this, feel free to give us a follow on our YouTube channel or me, OKC, CFA, CFP on Twitter. Talk to you next time.